I have less than a $500,000 budget and less than $50,000 capital saved up to go buy my next investment property. In this video, I'm going to answer this exact question. Where should I be buying if this was my framework? I'm going to go through 5 areas all across Victoria and New South Wales, regional areas that you should be looking at and that should be right at the top of your list. The reason why these markets are doing so well is because demand is starting to increase and supply cannot catch up. That means property prices are beginning to rise and will continue to do so. Let's get straight into it. So the first area that we're talking about is actually an area about 130 kilometers from Melbourne. It's about a 2-hour drive and it's a suburb called Moe. M-O-E. If I've said it wrong, forgive me. The reason why this is popping up on our radar is because the data is starting to look pretty strong, and when you put in the economic fundamentals of an area, this spits out a little bit of an anomaly to pay attention to. So let's get into it. Let's start off with a map to just put you into some context of where we are. We're getting in the car, we live in Melbourne, and we start driving out east. Up kind of northeast, you start driving, you go for a long time, about 2 hours, and you'll end up here. And you wonder, why am I investing in property in Moe 2 hours away from Melbourne? How did I get here, Redem? That is what you're thinking. So let's go through some of the data here. I'm on HTAG. This is the best property data source for you to work out exactly where you should buy. It's what all buyers agents and all data-driven people use. It's what everyone who should be investing in property should be looking at when they're trying to work out where they should look next. You should probably have some sort of subscription to this to be able to do your analysis yourself or leverage other people who do. So let's go through what it is spitting out. So here's this suburb. There's this Moe and there's Moe and Mildura. In my search of properties, both of these locations popped up, but let's start with Moe. So you can buy property here from, if your budget starts at 300,000, you could probably find something. Around 350 is really the base point for when you're buying in this suburb. And you can go, well past 500,000. One of the big upsides to this area is it's got a really strong yield. In Melbourne, if you're buying, you're going to really struggle to get a 4% yield. You go 2 hours away, you're starting to get a 5.5% plus yield when you're searching. That is pretty hard to find and really, really attractive when you're investing. So the average rent around $400 per week, and there's a whole range of data reasons why it is very, very attractive. So let's go through some of that. So let's start with the economy in Moe. The unemployment rate right now sits at 5.6%. Well above the Australian average, and you're just like, 5.6%, I don't want to invest there, but that doesn't matter. The actual number is not important. How it tracks over time, the economic change is what you're looking for. And historically, it's been up near around 8% not too long ago. And now it's down near 5.6%. That means the economy is pretty strong. And then when you do a sectorial analysis, this is what we have been doing. We've been breaking down the sectors of employment to work out where to buy. And here you start looking at energy and power generation, healthcare and social assistance, and manufacturing. You're looking at 3 sectors of the economy that are all doing pretty well with pretty strong fundamentals for the next few years as well. Energy, healthcare, manufacturing, these are strong sectors to have an economy diversified around. They are also not that prone to disruption from some of the technological change happening at the moment and drivers of economic activity going forward. So the economic case in Moe is pretty strong at the moment. You have good economic fundamentals, unemployment coming down, and you have a decent sized economy as well with around 80,000 people in this location. So it's not small, it's not tiny, it's reasonable size. 80,000 people in terms of a size of an area is decent, and it does mean that there's some diversification in there as well. And you could start seeing a pretty healthy economy that is increasing in gross state product as well. So economic fundamentals are there in Moe. And now let's start looking at the suburb level reasons as to why it is doing well. Firstly, you can buy it with a good price point, with a good rental yield, making a solid cash flow and capital gain play for you to look at. And you're starting to see that market pressure build up when you start going through the data for Moe. You have decent affordability, a good renter owner occupier mix, 1/3 renters, 2/3 owner occupiers. It is a lower socioeconomic area. It is very much so. It's a cheaper area. The budget price points are lower. It's got higher crime rates. You'll start seeing some of that, but that's pretty normal when you're buying in an affordable area, and that's nothing to shy away from as well. In terms of market pressure, stock on market, 0.23%. It's very, very hard to buy a home in this suburb at the moment. It has been decreasing as well. There's not many people trying to get out of there and trying to sell their homes. In fact, they're holding on to them, and now there's not many available to go and buy. Exactly what you want to see. This is the concept of inventory. How many homes are there for sale? If there's no homes for sale, prices start going up when demand starts rising, and you can start seeing that happening too. You have the whole period that people have the homes for increasing too. You got a very low building approvals number here as well. You have a very low vacancy rate, around 1%, and the days on market is around 36, which is fairly strong and hasn't been moving around that much. So when I'm breaking down this particular area, it's a little bit of an early mover area. It's not one that spits out being like, it's about to go woof. You want that? Go to Townsville, go to Rockhampton, go to Mackay. Go to all of those areas up in North Queensland, you'll get certainty. You're going to be paying through the nose for it and elbowing away everyone to try and buy a home. But you want to take on an early market position where supply levels are constrained, the economy is strong with decent fundamentals, that isn't far away from Melbourne, that gives you a high yield, that gets you at a price point that you want to be buying at. It's got a lot going for it. That's going to win from the Melbourne cycle as well, where prices haven't risen dramatically over a period of time too. This is it. We've talked about it on a whole range of podcasts about some of the things that you want to look at. Now I'm telling you suburbs that you can look at that exhibit tick boxes. You need to go through 15,000 odd suburbs to get these sort of insights. And this is one that has a lot going for it. I'm looking at this and I see a lot of potential to look at. Hey everyone, I've just noticed that we only have 27.6% of you subscribed. That means 72.4% of you are not subscribed and watching this channel every single week. We have thousands of viewers now. If I could ask a big favor from you, could you please hit that subscribe button and that bell notification if you are watching this channel regularly? And it'll really help these YouTube gods get our content out there to a wider audience and to keep spreading our message of transparency, education, and sharing everything we know with you so you can make better investment decisions. The second suburb, and this one, Adi at Laya has been pouncing on and buying up big there for a number of our clients, and we have faced serious competition as well buying in this suburb from other buyers agents who are all over it too. It is a market that is starting to froth up and get more and more attention. I am talking about Mildura, another area in Victoria. This one is a much, much longer drive. Let's check it out while I'm here. Let's go on Google and see how long does it take to get to Mildura. I have never been here and it is really, really far away. So another one where you look at being like, why am I buying in Mildura? That's ages away. That scares me. Like, tell me a little bit about Mildura. I don't know too much. So this is a 6-hour drive. Man, Adi, if you're watching this, you go on long drives. 6 hours from Melbourne. He goes up there fairly regularly to look up properties there. But 6 hours away, right on the border of New South Wales and Victoria. I'm looking at this. It's even closer to Adelaide than Melbourne. And, man, Sydney? No, okay, Sydney is further away. It is literally in the middle of nowhere. That is the best way to describe this location. It is a giant, you can fit multiple countries. The country I'm born in, you can fit that country 2, 3, 4 times over before you actually get to this area. It is crazy that this has popped up on our data metrics, but it tells you exactly what you should be looking at. Economic fundamentals that drive suburb selection, and then you find specific properties. That is the layer of how to find a great investment property that transforms your wealth. Let's go through the data in Mildura and what we have picked up. Okay, when you look at Mildura, we've placed a lot of phone calls with lots of real estate agents. One of our guys is on the phone in Mildura every single day and knows everybody there. You want to be buying, if you want a strong owner-occupier appeal, you probably want to be buying west of Deakin Avenue. Mildura is kind of split up, and you want to be looking at one side, the side closest to Adelaide of Deakin Avenue, and the other side is probably going to be more of a transient area, more of a renter population, less of a desirable spot to look at. This is at least according to multiple real estate agents that we've bought from. The owner-occupier demand is probably on the west side of Deakin Avenue. So that is some real good insights for you. Mildura's population is a little bit under 60,000. It's going to stay around there over the next 2 decades, having a growth rate of around 1%, according to Regional Development of Victoria website. In terms of its economy, you're looking at an agricultural area. Of course, you'd expect this. We are in the middle of nowhere. This is where agricultural heartland of Australia typically is. It doesn't make sense to have agriculture in the middle of our capitals. It has it inside locations where you can go and build and create great agriculture to export to the world. You've got dried vine fruit, grapes, almonds, pistachios. Oh man, I'm getting hungry thinking about this. Mildura, you produce some good food. It's got some tourism there as well. And in terms of price point, let's go through the suburb data. Those are some of the high level, what is Mildura? 6 hours away, good agricultural economy. You kind of want that as well. I think it will have a good runway over the next few years as well, particularly with our lower dollar at the moment and a really, really strong sector of the Australian economy that continues to grow over time with that rising middle class all over the world and some of the best agricultural produce in the whole world. Mildura is home to some of that. Price point around 450K, but if you have a really low budget, if you want to get into the market, you really want to get your foot in the door. Think of it yourself. This is me when I'm 20 to 25 years old. I've saved up a little bit of a deposit and I'm hungry. I want to buy a property right now. I want to get my leg in the door, my foot in the door and be like, I don't want to wait till I get to a 50K or, I want to get in as quickly as I can and make my money work really hard for me. Mildura is somewhere to look at because you can get in. You can buy a unit there for around $250,000. And we've talked about that on a number of podcasts as well. It's a great investment opportunity if you want to get into the market, into a rising market early. Maybe put in a little bit of liquor and hard work and, do a little cosmetic reno and make a little bit of money that way too. Mildura units have that opportunity too. So you can start, around the $250,000 price point all the way up to $500,000. Mildura is looking good. You can see property prices have begun to rise over the past year or so. You can see that. The 1 year growth is 6%. The 3 year growth is 22%. 5 year growth, 50%. And 10 year growth, 100%. This is oddly consistent. It's been a consistent performer over an extended period of time, and it's doing fairly well at the moment. Its yield, 5%, really, really strong, and it's pretty low risk investment according to HTAG at the moment. It's saying that it's a really balanced cash flow and capital growth sort of asset on their metrics here. Its growth cycle is doing well, and it's got a lot of confidence in there at the moment because a number of buyers agents are there. Its renter to owner-occupier population is 37% at the moment, so pretty healthy balance there. And its affordability in terms of house prices relative to incomes is not too bad, below 30 years as well. Stock on market, you want to see market pressure. This is really what you want to see when you want to see price growth happening. There's no homes on market at all, and it's been trending down. There's no inventory of homes. Building approvals are pretty low and have been tracking down for a number of years, and its hold period has continued to go up. So people in Mildura are not selling out. There's no homes for sale. There's no homes coming for sale, and there's no homes being built. All the fundamentals that you want to see. One concerning point, little concern about Mildura, is its vacancy rate has started to go up. It's around 2.2%. It's still fairly low, but it has been trending up a lot through 2024. I think this might be because there's more and more investors starting to put their attention there. And when more investors come, there's more rental dwellings available, and that pushes up the vacancy rate. So if I'm buying here, I would expect a very strong yield, 5% plus, maybe even closer to 6%. I'd expect to be buying at a really good price point. I'd definitely be looking here if I had a really low budget. It'll be really near the top of my list if I was on a very low budget. And I'd probably be expecting rental growth to just be pretty modest over the next year, at least, because more and more investors are going in there. But it could easily go from a market that's, starting to rise to a market that does very, very well as more investors pop into the market. So before I go into the next 3 locations, I'm going to wrap this video up and do that in part 2, because the next 3 are in New South Wales and also markets that everyone should be looking at right now. If you've enjoyed this video and it's the type of content you want me to see, let me know in the comments below so I can do more of it for you. I've got a number of comments from each of you saying, can you do it in this suburb? Can you do it in this suburb? Can you do it in this suburb? So I'm shifting the information that I'm presenting to you based on what you are asking. And if you need help with your finances, give us a call at flintinvest.au. You can see our website there. And in the comments below, you can book in a call with us directly in the description. And if you need a buyer's agent to help you out, Adi is the best in the business. You can reach out to him at Alaya Property 2. His description is below too.